Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update about the economy and the investment market so you can understand what we see in the global landscape. Generally speaking, the U.S. economy is on track for 2015. Unemployment numbers look good, GDP looks good, retail sales generally speaking look good. Earnings are starting to come out, of course, from the fourth quarter of 2014. And so far they look pretty good. It's early on, but we firmly believe we're going to see between a 6 and an 8% earnings growth. We're also seeing revenue increases with certain companies. So again, that's positive. Oil prices, as everybody probably knows, are way down. You go to the gas pump now and you're seeing $2 gas or even less. This ultimately is a big up for the U.S. economy. Remember, 70% of our economy is consumer driven. When you reduce gas prices by, $1.50 a gallon, that puts a lot of money in the consumer to spend. Statistically, if you look at the U.S. economy, about 18% of companies are negatively affected by the reduction of oil prices, but 82% are actually beneficiaries of cheap oil. So again, generally speaking, this is going to be a net positive for the U.S. economy as we continue into 2015. Now, our oil price is going to jump back to 100. They could, but I seriously doubt it. One of the reasons why we're seeing low oil prices is simple. Fracking, the technology in our country, which is pretty much only used in this country, is basically creating supply. And we don't have enough demand to use up that supply. Over time, our technology will probably create even more oil, and eventually we will become oil independent. Most of the numbers right now look at about 5 years. But think about this. If the technology we're utilizing in the U.S., of course, goes around the world and people start using it, that means there could be potentially even more supply of oil, meaning it could keep prices this low, or they could even go even lower for years to come. Cheap oil helps us. It does negatively impact other countries, but generally speaking, most countries benefit from low oil. The ones that are negative, it's a small percentage, so I think that's a net positive for overall GDP growth. Ultimately, I look at interest rates in the U.S. We're at about 2% on the 10-year. If I look at last year, I would have thought rates would at least stay at around that 3% level, but they came back down. Why is that? I'm getting a lot of questions about low interest rates. It could be that, generally speaking, other countries outside the U.S. are a little bit weak. Not dropping, but they're weak. So it could mean that money's flowing into the U.S. Treasury market, pushing these rates down even further. If the economy does well, if the Feds raise rates, which I think will be slow, and I think it'll be later in this year at the earliest, we could see a little rise in interest rates, but don't expect a big increase of rates. And if they do move, it's going to be very slow and very methodical. If you're a client of our firm, give me a call if you have any questions. If you're not a client, call our office for a consultation. There is a difference, and we do invite you to experience it. Have a safe and profitable day.